sticking with what's going on in the EV space, aides from President-elect Donald Trump's team are exploring tariff plans that would only focus on certain sectors. That was according to a report by the Washington Post. While investors prepare for Trump's second term, many are wondering how potential tariffs could impact Tesla stock in 2025. For more, we're bringing in Stephen Gengaro, NextGen transport analyst at Stifel. We should mention that President-elect Trump has said, no, that's not the approach we're taking. So, you know, things are as clear as ever when it comes to what we're expecting for tariffs. So, Stephen, when you're looking at how to model it for a company like Tesla, what are you thinking? What models are you using? Are you having to just consider a wide range of scenarios?
Yeah, good afternoon. Thanks for having me. So it's a very good question, right? As we try to sort of gauge the impact of tariffs, it's wide ranging, right? I mean, in some cases, it limits competition in the U.S. market. So if you're manufacturing cars in the U.S. like Tesla, it's theoretically a positive. And then there's the supply chain portion of it where you have to think about, because you're getting a lot of parts from areas outside the U.S. market. So there's definitely a lot of moving pieces. And so when we think about the tariff side, we try to account for it in the model very, very loosely, honestly, at this point. And then we basically adapt as we get more information on how things will ultimately flow out from the Trump administration.
I'm curious, Steve, you know, we've had some of your colleagues on the street come on, and they're very bullish on Tesla. And part of their thesis, Steve, is that, you know, in their words, you know, Musk bet on Trump, and he bet right, and this is now going to mean good things for Tesla. It's going to mean, hey, Trump's going to speed up, he's going to accelerate autonomous driving. Is that part of your thesis, Steve? And if so, what specifically, in terms of regulatory policy, do you think would be impacted?
Yeah, so I think to start, and we get the question a lot about Tesla, like, is it more than a car company? And I think the short answer is yes, right? If you're buying a stock simply because they're selling EVs, the stock's overvalued. When you start thinking about the full self-driving initiatives and you start thinking about how that plays into the cybercab business over time, that's really a huge value driver for the stock in the medium to long term. And that's kind of how we think about the valuation, is sort of discounting back, you know, the potential from those businesses. When we think about the regulatory environment, you know, right now we have, you know, sort of supervised self-driving. If you ever tried it on a Tesla, you basically take your hands off the wheel, the car basically yells at you, right? And getting to that sort of unsupervised level of self-driving, which is really the catalyst to get to these other product lines, it's going to take some time, right? And I think right now you're really focused on California as one of the main markets. Elon Musk has talked about having some sort of fully self-driving vehicles in Texas during 2025. So it's really niche from a market perspective now. As far as sort of betting on, you know, Musk betting on Trump, I think he's clearly engaged in the conversation as far as getting, you know, sort of regulations accelerated on the FSD side, and that sort of opens the door for just various growth opportunities for the company over time.
Steve, what is the risk inherent with that? In other words, you know, obviously Musk would like to, you know, have actual full self-driving on the road as soon as possible. Is there a risk that with the regulatory forces aligned in his favor, that it gets to market before it's actually ready?
Yeah, there's actually two big, I think, points of debate here, and I think you hit on one exactly. And it's, you know, if there's an auto accident on my way home today, and there's, you know, an accident on the side of the road, nobody hears about it, right? If it's an accident with a full self-driving Tesla, you can bet it's basically on every news source across the country saying, you know, a self-driving Tesla got in an accident. So the reaction to a problem is going to be obviously exacerbated. I do think you're right, though. I think you have to be a little bit careful about getting, you know, the capabilities to the point where they're at least as safe, if not probably safer than humans driving the car before you get it to roll out aggressively. I think that will honestly be part of the regulatory environment as it unfolds. The other part of this is the Tesla AI-based, camera-based, AI-based system for FSD the answer. There's certainly experts out there who think you need some type of LiDAR as part of the process, like a Waymo has. We think the AI camera-based system does work, but that's the other debate here, and probably the other risk, sort of the Tesla story, is their FSD system ultimately going to be successful? And we think it will be, but that is a point of sort of risk to keep in mind.
More sort of near intermediate term, Steve, that relatively lower cost EV, we expect that when, Steve? Is that mid-year? What would you be looking in terms of price point there? And what do you think that's going to mean for just the overall trajectory of the EV business?
Yeah, and last week they sort of slightly missed on their deliveries for the fourth quarter. They slightly missed on their kind of target of modest 24 growth over 23. And the rollout of what we still call the Model 2 in our model, but the rollout of that during 2026 is I think really what's behind their expectations. You get 20 to 30% vehicle growth in 2025 versus 2026. We're pretty careful about the vehicle growth numbers in 25 relative to what they've put out. We're at the lower end of that 20 to 30% range, but that vehicle should start to roll off the production lines during 2025.
Steve, great to see you on the show today. Thanks so much for joining us.
Yeah, thank you.